This is Market Moves coming at you. Canopy Growth just released earnings. I'm going to be one of the first to tell you about them. Stay tuned. So real quick, I'm Market Moves Matt. I put out a bunch of videos on investing and trading, technical analysis, everything you can imagine. And the biggest thing here, but most importantly, I go over pot stocks. I cover all the big names out there and I compare them within the industry. This is my pot stock playlist. Check it out. Top right hand corner, you'll see all the videos of my pot stocks. Also, please hit that subscribe button in the bottom right hand corner. I would greatly appreciate it. And I just want to show you one more thing before we get into these earnings reports. Right here is my pot stock valuation sheet. This is a free sheet I give to anyone who wants it. It's in the link in the bio. This sheet will help you value pot stocks within the industry with other pot stocks. So right now, if I click my value score, this is something I developed myself. We're going to check out CGC today, see how the numbers change the value score, but CGC is right in there with the yellow, so it's not too cheap, it's not too expensive. It's the perfect fair value in my opinion. But if the revenue goes up a significant amount, let's say I add another 30 million per year, then the value score is going to drop to 31. So that puts it at almost the bottom 4 on the list. And I'm going to to the 72 million that was there before. And then I just want to point out ACB just reported earnings and it dropped its value score almost to the lowest value score on the list. Right now ACB looks like the cheapest stock out there. The only thing is that in the financial report that just came out on Monday that I went over, there's a video to that in my playlist. The numbers, there were gross margins that went down, a lot of taxes being put on marijuana products. So there's a lot of things affecting this company's profitability. Also, they have a very small cash pile and they're losing a lot of money per quarter. So that's another reason why I'm a little bit nervous to get into the stock some more from where I'm at now. But in all sense of the numbers that came out, we are in the lowest value score. Our price to sales is still very high. It's almost at 100, but it is in that middle range. So ACB is 88 price to sales, but yet again, it's still in that middle range of all the pot stocks out there. So I'm going to be updating the CGC numbers today. We're going to see where it puts it on the list. This is free. It's in the link in the bio. Check it out. We're getting into the numbers right now. And here we are with the Q2 2019 financial report. We're going to go over the highlights first and then the numbers. So stay tuned till the end as we update that pot stock Excel sheet. So total second quarter revenue was $23 million, representing a 33% increase over the quarter ending last year. So 30% increase in revenue. That's a good start. Not the greatest from all the pot stocks I've seen, 100%, maybe 300% from the last quarter. So this is on the lower end of that increase. As you can see, the market is kind of selling this after hours. We'll see how far it goes down, but the numbers I'm reading to you now are just coming out, so the market's going to be reacting as we speak. And then we have a total revenue of $17,000 last year, with a 10% decrease from the prior quarter, Q1 2019. We brought in $25 million. We only brought in 23 for Q2. So revenue is going down, kind of confusing because a lot of the other pot stocks reporting are boosting those pot stock earnings and revenue is looking great. So revenue's down from the prior quarter. It's up from the prior year. So it's kind of mixed reaction right now. Next line, we'll talk about the kilograms sold. I know ACB sold about 5,000 kilograms, and we have Canopy Growth coming in at 2,197 kilograms sold this exact quarter. So last quarter, that's down, that decreased 18%. So revenue's down. They're not selling as much marijuana. I don't know what this can be attributed to. We're going to go through the report and try to find some details, but overall, it looks like growth is slowing in an industry that is booming. So this is not good news for CGC, but we do have a 9% increase from second quarter of last year. So it's not up from last year. It's down from the previous quarter that just happened. So we're going to dive into the actual revenue numbers and the expenses, seeing if they're actually losing a lot of money as well. So there's a lot of things happening with this company just off the first two lines, and we're just going to check the reaction. Looks like we're still flat, no big movement yet. The revenue breakdown, we have oil sales, including gel caps, accounting for 34% of the revenue from this quarter. So that is a high margin product segment. It's good to have that be 34, maybe even 50% one day, but you want to have that percentage go up because these are high margin products. You want to be selling more of these. Here's some information for the bulls. We have Germany sales to 10% now of total product revenue. This is 1% from the last year. So this is about 1,000% increase from the prior year. That's huge. And Germany is a market that not many people talk about in their reports. So if they're getting into Germany early, that's a reason for the bulls to be excited. We're going to check out average sales per gram. This is $99.87 for the second quarter compared to $7.99 last year. So they're making more per gram. That's good. They're selling the grams for more. That's good. And then we have the first quarter coming in at $8.94. So this is increasing right now. That is a great reason for the bulls to be excited, but we want to see their margins. We want to make sure they're keeping more from higher grams per dollar. So this is exciting. And we have harvested 15,000 kilograms in the second quarter compared to 9,000 kilograms in the first quarter of 2019. So we're harvesting more marijuana, but apparently we're not selling it as much as the last quarter. So the harvested kilograms are up more than 60%, but sales are down. So they must have a lot of pot and a lot of marijuana in storage. This is good value. This is good book value for them to eventually sell. We just have to check the shelf life, make sure this marijuana doesn't go bad. And also, if they're harvesting this much, they're well above ACB's harvest. ACB can harvest about 7,000 kilograms, but again, they're selling about 70% of that. So right now, Canopy Growth is harvesting a lot of kilograms, but they're only selling less than 10% of it. They're selling about 20% of it. And this is just confusing to me why they're not selling more if they have more and they have these connections within the industry. So this is right now just back and forth between good and bad, good and bad. And we'll go through more of it trying to figure out what the actual numbers are and trying to figure out how this changes that value score, price to sales, and everything. So at the end of the quarter, the company held an inventory of 31,000 kilograms of dried cannabis, and that's a huge amount. If they're bringing in 15,000 kilograms, this number is going to keep increasing. We just want to make sure it has a good shelf life and can last a while. So that's a lot of storage, and if they can get these products out to international markets, they're going to be ramping up revenue down the line because they just have a lot of product that they need to sell. So they just need people to buy it and revenue streams to start working again. So this is pretty exciting right here. The Tweed's own retail store, this is opened in October. They made their first legal sale of recreational cannabis in Newfoundland. So that's really exciting. They're going to get those stores out there. They're going to be selling. So it seems like they're very early getting all this cannabis in the stores and selling it, basically getting the production to supply and then to the consumer. So it seems like they're just setting this all up for the future, and this is going to be why their numbers are going to be boosted in the end. So right now, it seems like they're just setting things up, honestly, because right here they talk about their second quarter. They have supply commitments to the provinces of 70,000 kilograms in a year, not including Ontario. So if they have 30,000 kilograms, they can obviously fill this order within the whole year very easily. So they have a great growing capacity to expand, and they can easily bring in 70,000 kilograms and make money from that with lots of revenue. So if they're only selling 2,000 this quarter and they have supply agreements for 70,000, then I just see reasons for this thing to take off in the next year, maybe 6 months. We'll see. And right around here, they talk about their medical patients. They talk about the possibility of this industry being $1.3 billion of actually just their clients alone by 2024. So I just want to point out the medical industry, yet again, another high margin industry. All these companies want to get into very quickly. So you want to see these numbers of patients increasing, and you want to see them sustaining a great amount of patients. And we finally have the numbers. This is a very important thing to pay attention to. We want to make sure we're looking at the revenue, the expenses, the net income, the gross margins, everything important. So I'm going to be pointing that out right now. We got revenue this quarter, like I said, coming in at $23 million. lower than last quarter at 25, and we have Q4 2018 being 22. So it looks like we're steadily in the 20 million range. Like I said, I think we're just ramping up. We're ready to go. But right now the revenue is not increasing. So that gives me some pause. But I'm going to add up all four of these numbers, and just eyeballing it, we'll just say it's around 100 million. And we can even lowball it just a little bit more. So I'm going to throw that in the chart. CGC, we'll call it 95. And that's going to drop the value score to 33. So we'll just sort that yet again, and we'll see CGC is in the top 4 as the cheapest marijuana stocks after the new numbers came out. So as more numbers come out, all these are going to start shifting pretty crazily. And we'll check out price to sales real quick. CGC's got a higher price to sales, double of ACB. So that's a really good thing to note. You want to see that number, and you want to make sure that you're not paying too much for this company. And price to sales is a good metric of expensiveness. So it's twice as expensive as, and right here is the bread and butter. We're actually going to be reading the actual financial sheets. So the assets liabilities page, and then the statement of cash flows. This is going to be a very good way to learn how to understand them and how to understand the company and where the cash is being spent and all that stuff. So assets right now, this is really bullish right now. We have $400 million in cash and cash equivalents compared to $300 million last year. So if that number keeps going up, I like to see that as an investor, and so does Warren Buffett. That means the book value is going up, so you own a just healthier stock in the end of it. So we have about 2.9, almost $3 billion in assets compared to long-term liabilities, which we're going to check. So this is all of assets up here, and you want to compare that to all of the liabilities. So unfortunately, this is considered the stock included. So you want to look at it without the stock included, which is going to be 1.1 billion. So we have about 3x on current liabilities, total liabilities to total assets. And that's a good ratio. 3-to-1 is very healthy. The current liabilities, or the ones they have to pay back the soonest, that's about 1 billion. So more money is in the current section. They have a lot of debt they have to pay quickly, and then the current assets, they don't have that much to pay that 1 billion. So they're actually underneath that 1 billion level at 700 million. That is a kind of yellow flag right there. Not going to say red flag, but if they want to pay off debt quickly, they need to have more current assets to pay, so more cash and everything like that. So this is current portion of long-term debt. This looks like it's almost $1 billion. So I'd look into that if you're curious about what's happening there. But the next sheet, I love looking at this. This is revenue, gross margin, loss. We're going to see if they made money this quarter. So like we said in the last couple minutes of this video, revenue's down from last year. We have 23 million for this quarter. Last year we brought in 17. The previous quarter we brought in about 25. And then we're going to check out how much we kept from that. So after all the expenses, the cost of producing marijuana and selling it, we're left with a loss of $33 million. And this doesn't contain R&D and sales. So once we take out those expenses, we actually lost $200 million. So we brought in $20 million and we lost 200. After a bunch of other calculations, we have share, loss of equity investments, other income expense. I don't really know what this number is. I'm not going to pretend like I do, but after that, they lost $330 million that quarter, leaving the investor with a $1.52 loss per share. And this is surprisingly less than last year, where we only lost, oh sorry, I'm reading this wrong. This is much higher than last year, where we only lost a penny per share. And if we head to just the overall loss, we lost about 1.6 million last year. Now we lost 330 million. So I said this in the past video for 2 quarters ago. I said these expenses cannot keep racking up. It's not sustainable. and a lot of legalization happened and in Canada, and a lot of expenses went into that. They have a lot of facilities they have to get done, so a lot of money is going to be dumped into this year, maybe next year, but you want to make sure that revenue keeps increasing because they have to pay off these losses somehow, or else they're going to start diluting shareholders and issuing stock, and I don't want to see that happening. So the comprehensive loss, this keeps adding up, comes to $430 million. And this is just a fair value change in assets. And yeah, for some reason, this just keeps getting worse as I keep scrolling down. I'm not a fan of seeing how much they're losing each quarter, and it's growing at a massive rate. We want to check out this sheet's cool. This is the shares. We want to make sure shares are not increasing at a higher rate or increasing at all. We want to make sure shares are kind of being consistent. So the balance of shares in March 2017 was about 162 million, and then we have 168 down here for the balance, and this isn't giving me 2018 for some reason, and here we are. So 2018, we're at 223 million, so we increased our share count by about 60 million shares. I'm going to throw that in there, make sure it looks good. So share count for CGC is at 344 million, and this is from Google Finance. So I'm just going to plug in the correct one, and yet again, Google Finance could be wrong, or the sheet could be wrong from what I'm looking at, but if this puts it at a much smaller amount. So let's just check out what happens if I throw 223 in there, and that's going to boost our, looks like it doesn't change too much, so that's a good thing. So it doesn't really change the expensiveness or cheapness on my valuation chart. And then that's pretty much all I want to go over in the numbers. This just shows you where the cash is flowing in and out of in each category. We have investing, financing. So this is something for you to look at. Make sure your company is not putting cash in different places that don't belong there. So I challenge you to check this out, but this is a very in-depth overview of the CGC earnings. Please share this video. And I just want to point out one thing is that on my channel, I just had a 5,000 subscriber giveaway, and I just want to show you it real quick. So it's right here, and I give away probably one of the best things I've ever given away on my YouTube channel. It's 14 days for free on the premium Trade Alert group. So right now, this is the Trade Alert group. We give out 3 to 5 trades a week, and we bring in about 30 to 100% return each trade. If you took every trade the past 2 weeks, you would have made $3,690.14. So please, I'm giving you an extra 7 days to sign up. If you just watch this video, use the link in the bio, and I would really appreciate it because I would love to just have more people trading and talking in this group. So this is all I got. Market Moves signing off. Peace. Information on the Market Mover Indicator, free consultation talks, and courses, head to the website marketmovesmatt.com. Don't forget to hit that subscribe button and check out the latest and popular videos I have uploaded.